Okay. So Athennian. So we started Athennian in somewhere between 2016 to 2018. It's a bit of a blur, but somewhere in there. Now we're about 70, 75 team members. The company is officially based in Toronto, but we have folks in the US, Canada, the UK, and South Africa. So what we do is we are officially an entity management software, business entities, legal entities, and we help legal, finance, and operations teams manage typically quite large and complex corporate structures. So this is a list of little visual on the far side of the screen of typically what our customers' corporate structures are looking like. So typically hundreds or thousands of boxes. Each box will be corporation, LLC, limited partnership, or some other type of exotic vehicle from various countries. So what drives complexity in corporate structures? Volume of entities, number of countries. So a lot of our customers are operating in 50, 60, 70, 80, 120, 130 countries. Some countries are easier to operate in than others. The United States is materially easier to operate from a compliance perspective and having a business presence than, I don't know, Sierra Leone or something like that. We have mining clients that have entities in countries like that. Intensity of regulations. Typically, the dirtier the better for us. Manufacturing, oil and gas is very good. Financial services, healthcare is very good as well. And then the usual stuff that I think everybody else in this room would expect. The more M&A, the better. More capital markets activity, the better. In terms of us being able to help customers with these types of problems. So it tends to look like concentration with multinationals. Private equity is a big category for us. Real estate, energy, that sort of stuff. So when you are a company that checks a lot of boxes on that list, this usually is a total shit show for you. So you're trying to work across legal, tax, treasury, HR, sort of across the G&A in the back office to make sure that these entities are active, all the data is up to date, all the data is in one place, such that the rest of the business can rely on it for sometimes, operational day-to-day decisions. For example, we need to lease a new office space in Italy. What entity do we use, and what is its corporate registration number, because we have to put it on the lease. 2, we have to do consolidated tax returns in Singapore, and they want a full corporate org chart stapled to the back of the tax return, all the way through to strategic events like M&A, due diligence, that type of stuff. So our software brings all the data together, allows all the teams to plug in. So when Zach was talking about legal really expanding throughout the enterprise into different departments, this is really a pattern that we're seeing with our customers. 20 years ago, legal entity management was, as the name describes, a small number of people in a back room managing this data in a spreadsheet or a very old piece of software. Our customers want to API this data everywhere. They want, tons and tons of teams logging in. So some of our customers have, 800-900 people logged into our software across, everything from sales, procurement, to access the data for themselves. This is an example, again, when you're operating at scale, like most of our customers are, of how something as simple as forming a new entity, like for me to go form a new entity is, if I have a small business, is not that big of a deal. If I'm a private equity sponsor and I need to spin up a co-invest vehicle for a deal we're doing and one of our LPs wants to come in directly, it can get more complicated. We tend to go deep with our customers. This is an example of a flow chart, sort of racy flow chart we've created with one of our customers to help them map out that process. And it weaves between legal, tax, finance, outside counsel, fund operations, fund accounting. So if there's any consultants, legal, finance, operations consultants in this room, there's lots of work for you in our category, so reach out. The market's growing quite quickly. So it was a sleepy little market 10 years ago, but it's growing. Cloud penetration. So just digital in the back office across the G&A, like a lot of legal categories are experiencing. But a big thing that's more secular to our market is this idea, this kind of concept of corporate transparency. So 10, 20 years ago, large businesses could operate across borders, could operate with financial services, and not need to communicate their corporate identity as much. That's changing significantly. So there's growing regulation in the world called beneficial ownership. In the United States, the legislation is called the Corporate Transparency Act. There was a decision today from Texas, another one that keep trying to strike it down for being unconstitutional. Probably won't stick like it did in Louisiana. But essentially what this is companies have to report to the government. For any entity registered in a specific jurisdiction, you have to report go through all the Russian nesting dolls, all the layers of the onion until you can report to the government an individual that substantially controls that entity. And then we need a KYC package on that person. And that has to happen every year or upon change. So this is happening globally. A lot of these registers are public, so they can be publicly searched depending on the country. So obviously that adds another layer of sensitivity. So our customers are having to report this at increasing frequency, and so they're putting all the data in our software. So we have a lot of sensitive information in our software. It's not just the corporate structure and all the documents behind it. We have scans of passports for the CFO, board of directors, things like that, because it's required for this type of legislation. There's also a lot of commercial enforcement, so like supply chain transparency is significant as well, where companies are essentially, doing KYC on each other, which is creating a lot of pressure. So this is just some stats just to kind of make it real for you in terms of how our customers, feel the pain and benefit of this functional area. So I'll skip that. There's an upgrade cycle in this market. So there's a bunch of very old products built 25, 30 years ago. It's similar to CLM where you had Exari, and I forget the names of the other ones, but these really old products, and you had, Link Squares, Ironclad, came through and upgraded. So there's an upgrade cycle. There's also an upgrade from spreadsheets cycle happening in this market. As you'd expect, we're the best in this market. We have the stat I'm most proud of is our gross retention, which is in the mid-90s. So that's not net, that's gross. So our customers love the product, they stick with it. And I think we've renewed, 70% of ARR in the last 24 months. And we're still in mid-90s, even in difficult economic conditions. So very proud of that number. AI, I have to talk about AI. The biggest problem with our category from a customer perspective is data entry. So the software looks like a CRM sort of database product. So you need to put people in front of it that can sort of coordinate PDFs out of Outlook and upload them and then key in data. So that's too expensive. Humans aren't good at data entry. They make a lot of errors. So our AI, throw PDFs at it and the system will update itself. We think we can leverage that as a foundation to create largely autonomous corporate secretary agent in the coming quarters and years. That's all I got. Thank you so much.